said, I got a question, Akil. Sure. What's the motive behind you holding on a trade which comes like 2 pips to targets, then gets sucked up till it hits your stop? Thought we were here to make money and not prove a point, but I would like to hear from you. Discipline. Discipline. Following your plan. I've got many stories about this, but so here's what happened, Sean. Let's play this out. So let's say you're a trader and your target is right here, right? 125.88. Price comes all the way down to 125.90, right? Now, I'm assuming there's no reason to take yourself out of the trade aside from what? That we're close enough. Would I be correct? Right. So you take your trade out 2 pips early because you're close enough, right? So let me ask you this. So if our targets are at 125.88, but we're going to take them out at 125.90, why not 2 pips higher? Why not 125.92? Is that fine as well? 2 pips above our 2 pips, is that okay? Okay. What about 125.95? What about here? What about here? Right? It's always going to be at some point close enough. So here's the question. When does it end? When does the close enough end? How do we know? How do we know when to stop taking targets close enough? I had a friend of mine that did this because he took a trade and then it reversed 2 pips above his targets. So the next trade, he took it 2 pips early or 5 pips early. And then eventually it reversed 5 pips above his targets, his new targets. So he took it 5 pips earlier than his previous 5 pip targets. He was taking them 10 pips early now. And eventually he was taking targets 50% of his trade. Win percentage was good, but his risk reward was horrible. So the question is, when do we stop? How do we know when to stop? What stops us from just taking targets as soon as we're into any profit? Why not take targets every time we get 5 pips in the profit? Can you guys think of anything? How do we know when to stop? See, what many traders don't think long term, right? And this is the world of instant gratification we're at, where we look at a single opportunity and we're like, man, if I would have taken targets there, I know we were 2 pips before it, but if I would have taken targets there, I would have made money. And I would have made money on this trade. Whoop-de-doo, right? One frickin' trade. Does that do anything big picture? If you look at your yearly equity curve and take away one trade, does it have any effect? No. What does have an effect is if you slowly start taking targets early and earlier and earlier and earlier. Now you're in a process of self-sabotaging yourself, and that will affect you long term. So short-term positive effect, long-term negative effect. The question you need to ask yourself, are you playing the short game or the long game? So does that make sense, Sean? It's a very good question. And trust me, it's a question that probably every trader asks themselves, especially when price is dangling 2 pips above their targets. I should just, I could just. But bigger picture, I hope that explains why. Now, if you want to take targets early, just have a rule for it. Now you're trading within your rules. But then I guess it's not really taking targets early if you have a rule to take targets early. Now it's just those are just your targets. But it's a slippery slope if you go down, and eventually you'll just end up cutting your profits in half because there'll never be an end. There'll never be an end to what is too close or close enough. It'll start with 2 pips, then it'll be 4 pips, then 5 pips, then 10 pips, then 20 pips, and before you know it, as soon as you go from negative to positive with your initial trade entry, you'll be taking yourself out because that's the only way we'll ever stop. The only way we'll ever stop, unless you put in a hard rule. So discipline. That is the reason why. It makes sense, Coach. My notion was that you can never know what the market will do next and you can never be too certain, but it makes sense. Sure. Yeah. But the same thing, right? We never know that price is going to get 2 pips away from our targets, do we? So why not just take targets as soon as we go to green? Right? If our targets are down there, do we ever know that it's going to get to here or here or here? No. So why don't we just take it as soon as we go green? We never know if the market's going to go any further. As soon as we're in 1 pip of profit, we don't know we're going to get the 2 pips of profit. We should just exit our trade then, right? Here's the key, right? And I'm glad you brought that comment. We never know what the market will do next. You can never be too certain. And that is a fear-based comment, right? That is a fear-based comment. And fear-based comments come when you don't have a tried, true, tested plan, right? And again, it's long run versus short term. When you have a trading plan, a rules-based trading plan that is testable, verifiable, and repeatable, right? You've back tested it over time to prove that it works. You're playing the game of probabilities. That's all you're playing. You're playing whenever you take a trade, basically what you're saying is, I think price is more likely to go here, target level, before it goes here, stop level. Now that takes a massive amount of trust in your system and trust in yourself to do, but that's what you're saying. Now, on a trade by trade basis, do we ever know that a trade is going to be a winner or a loser? No, right? We are never certain. We are never certain. Steph Curry in the NBA, right? Probably the best shooter of all time. He's like a 95% free throw shooter? Or here's a good example, actually. Kevin Durant last night, Miami Heat. Golden State Warriors played Miami Heat. Dwayne Wade. Heck of a game-winning shot. 1 foot off the bank. Lucky. Right? But doesn't matter. Before that shot happened, right? They were down by 2. He hit a 3-pointer and win the game. Before that shot happened, Kevin Durant, right? One of the best players in the game was at the foul line for 2 shots. 89% free throw shooter. So you would assume that the shot is going to go in. He makes basically 9 out of every 10 attempts he makes from the foul line. Do we ever know he's going to make the next one? The odds are yes, right? 9 out of 10. But do we know, are we certain? We're not. And guess what he did? He missed the first foul shot. Now, if you give me the opportunity to put Kevin Durant on the foul line 100 times a game, would you still do that? Even if he missed the previous shot? Heck yeah, right? Because historically, he's made 9 out of 10. So you know in the long run, he's going to make a lot more than he misses. But every once in a while, there's going to be a miss. You never know when those misses are going to come. Trading is the same way, right? We know our probabilities. We don't know the exact outcome of every individual trade. I don't know what this trade is going to hold. I don't know what the next trade is going to hold. But I know over time what they're going to be. So we're never certain. We're never certain. The markets do what they want. But we can't let that fear of uncertainty allow us to make mistakes in our trading, because that's how rookie traders fail. Fear and greed, fear and greed. And that's why it's so important to have a plan. A plan that is testable, verifiable, repeatable, and a plan that you're able to consistently follow day in and day out of the markets without sabotage. And that's why we're disciplined, right? That's why we're disciplined. Trust your analysis. You put your targets at a certain location for a reason, right? Does anyone use random targets? I can't speak for the room, but I know I put my targets in a certain place for a reason. I put my targets at a place where I think price is going to go. If I don't think price is going to go there, I don't put targets there. If I don't trust my targets, what I'm saying is I don't trust my analysis. If I don't trust my analysis, should I be trading? Probably not. Now, of course, there are other elements you can do. You can do active trade management, right? You can make a rule if price action comes blank pips or blank percentage away from targets. I move stops to break even. You could reduce risk. That will help you mentally, right? Again, the fear of missing out on a target and getting stopped out is a big one. So being able to at least reduce risk, that puts a lot of people at a comfort level where it allows them to be comfortable enough to see their trade play out because they know that they can't take a loss on it. They may not win, no, but they can't take a loss, and that's big for many people. Obviously, if you're doing active trade management and the specific opportunity allows you to, you can even trail your stops and be in profit, or trail your stops into they're in profit if the market were to reverse. So there's different ways you can go about managing that fear, controlling that fear, putting yourself in a position where the fear doesn't dictate your trading decisions. But at the end of the day, you got to be disciplined. And even for the stuff that I mentioned, it should be all rules based. You're not just trailing your stops because, it feels like it's time to move it to break even. Nope. You're doing it for a very specific reason. So good stuff. That's a very good question. It's a common question. It's a common question. And it's hard. Don't get me wrong. Very, very, very hard. We talked about it yesterday. This has been a year where I know I've had at least 3 opportunities where they've come like 1 pip before. Usually it's far and few between. With me, it's more of pattern trading because I use Fibonacci-based targets instead of kind of like a dynamic-based target. So they're a little bit more hit or miss on patterns for me, but it happens.